What's up, millennials? Is the NFT coin Chiliz going to have another pump? Because yesterday I entered a new swing trade and I'm going to show you today where I entered that swing trade and when I plan to exit exactly. For that I'm going to be using technical analysis. So let's jump right into it. Let's first very briefly talk a little bit about Chiliz itself. As you can see on coinmarketcap.com, it is one of the biggest altcoins, one of the largest altcoins. If you sort on NFTs, you're going to see that Theta is currently still the number one and Chiliz is the number two with a market cap of about $3 billion. If you want to know a little bit more information, you can just go to chiliz.com to learn a little bit more about this NFT. So when we dive into the charts of Chiliz, we can see that it had a beautiful pump in March, of course. In a very short amount of time, it went from, just a few cents to all the way up to about 90 cents in total in a very brief amount of time in just a few weeks. Now, what often happens is that after a massive pump like this, we have a sort of like cool down phase, then everything goes back a little bit to normal, and then often we do see an additional pump to the upside, which often is a little bit smaller than the original pump. I'm going to show you two examples. Of course, we need to look at GameStop because, yeah, GameStop is epic, of course. We had a massive similar move to the upside in January, I think February too. No, it was actually just in January. We had that same massive pump that is looking a little bit like the Chiliz pump in a very brief amount of time, in just a few weeks. And then we had that cool down period in about like 1 month, I believe. It was, yeah, about like 30 days more or less. We had that cool down period, and then we had an additional pump to the upside, which covered about like 2/3 of the entire pump of this move. So this got all the way up to like about 2/3, I would say, of that pump over here. The similar thing happened with another stock. You might know it, maybe not. It's one of the smaller ones, but Solo. This is Electromechanica Solo. They make these little three-wheeled vehicles. How do you call them? Three-wheeled vehicles. Probably has a name for it, but whatever. It doesn't really matter. We're going to just look at technical analysis. So it had a similar move in just a few weeks' time. It went up from almost nothing to a lot, and then it had that same cool down period for, I believe, like 1.5 months even. Let's see. So yeah, about like 50 days more or less. And then we had an additional pump, also about 2/3 of the original move. So that's pretty good to see. I'm wondering if the same is going to happen to Chiliz. We, of course, had that massive pump, and now it might look like we are going to see a nice little move to the upside to get a additional like 2/3 move, more or less. Now, this is a very brief, very short move, I would say, a very quick move, and I've been looking at this for a couple of days, and yesterday this actually seemed to be ready for a move to the upside. I wanted to wait for confirmation because that is usually what I'm going to do, and that's what I'm going to show you a little bit later on when we talk about the 4-hour time frame. So it is a very quick move, and usually what I do is I look at the daily chart. So right now we are on a daily chart, and every candlestick is 1 day of price action. But if we see a quick move like this one, I often go to a lower time frame, for example the 12-hour or even the 4-hour. So let's actually get into that 12-hour chart for now. So I'm going to show you a few signals that I was looking at and why I thought that this seemed to be ready to move to the upside again. So a few things, and let's first of all take off the support and resistance because we are going to talk a little bit more about that when we cover the 4-hour time frame instead of the 12-hour time frame. Let's first of all talk about the 55 EMA, which is this white line over here. EMA, by the way, standing for exponential moving average, if you didn't know that just yet. The 55 EMA is often used as support in strong moves. As we can see over here, it did seem to hold up price action relatively well. It did, of course, go back down below that 55 EMA for a very short amount of time, just for 1 day more or less. But in general, it held up price action really, really well. So that seemed to be a nice support on the 12-hour chart. Also, if we go to the RSI, if the chart actually lets me, yes it does, we can see that we have a pretty good bullish setup right here on the RSI right here. So first of all, we had this trending move to the downside, the RSI being this blue line over here, and the white line is the exponential moving average on the RSI. First of all, we had that RSI going below that EMA, and it stayed below it. It used it as resistance, as we can see over here and over here. But now in the last couple of weeks, more or less, we seem to cross back above that EMA and now seem to be using it as support instead of resistance. So that is good to see. And the EMA is also similarly going to the upside instead of here trending to the downside. So that seemed pretty good to me too. And then another thing I'll look at is the MACD, the moving average convergence divergence indicator, always a beautiful thing to say. And it had a quite similar move to the RSI. So first of all, we had that MACD cross to the downside on the 12-hour chart. The MACD here being this blue line, the signal line here being the orange line. And often when we see a cross to the downside, we can expect some downside to happen, which is exactly what happened. The signal was fired more or less over here. And then we, of course, had this massive cool down period for a prolonged period of time. But right now, just a few days or even a week ago, on more or less the 9th of April, we saw a cross back to the upside, which was right over here, I think. Yeah, so right over here, more or less, that was a pretty good signal, I would say, to get maybe into a position. So we had a cross back to the upside, and right now, just a few days ago, on the 12th and 11th of April, we were using that signal line as a nice little support, and now we seem to go back to the upside. So that all looked pretty good to me on the 12-hour, and just a potential additional thing, an additional pattern. Now, personally, I don't really like patterns all that much, but there is a pattern that could be interesting. I'm going to zoom in a little bit so you can see that a little bit better. If you like patterns, this could be interpreted as a inverse head and shoulders. These two moves here being the shoulders and this move over here being the head. And that is usually a good sign for a potential reversal. But again, personally, I don't really care for patterns all that much. But yes, it is an additional signal for showing us that it could definitely lead to a nice pump in price action in the next coming weeks, I would say. But I actually use the 4-hour time frame, which we are on right now. So every candlestick is 4 hours of price action. I use the 4-hour to determine, a very difficult word to say, my entry and my exit as well. So I'm going to talk about those things in a second. But first of all, I want to show you a few signals that I was looking at the 4-hour chart. First of all, let's talk about support and resistance lines. These are lines that I always draw into my charts, and I've got 3 over here. First of all, we've got a support over here at 40 cents more or less, which was created by this low over here. Then another support at 45 cents more or less, created by this low over here and this low over here. Again, these formations seem a little bit like the head and shoulders we just have been talking about on the 12-hour chart. So here we have, again, that shoulder, left side shoulder, and the right side shoulder over here, and here would be the head. So the head looks for the 40 cents support, the shoulders determine the 45 cents support, and here we had some resistance around 50 cents more or less, which was created by this high over here on the 4-hour chart, this high, and then yesterday we were looking at that high, and the good thing was, and I was looking at this in real time, the good thing was that this 4-hour candle closed above this resistance level. So it closed above this high, closed above this high, closed above this high. So that usually is a good sign. We also had some solid volume going on over here. So that seemed pretty good. And that is exactly when I entered the trade. I'm going to explain to you in a second when I exactly entered and when I planned to trade, but I got in more or less at 51.3 cents right after this candlestick closed on solid volume 2. Then a few additional things I would like to talk about on the 4-hour chart is the closure, or sorry, the switch, the cross rather, between the 21 exponential moving average and the 55 exponential moving average. Let's actually look at these two. So those are the purple ones. The purple one is the 21 exponential moving average and the 55 being the white line over here. So if we scroll out a little bit, if we zoom out a little bit, we can see that first of all, during this bullish move, the 21 stayed above the 55 EMA for a long time. But then during the consolidation period of the cool down period, we saw that the 21 got below that 55 EMA. But right now, just yesterday, or was it yesterday? Yes, actually it was yesterday. We saw that we had a nice cross back to the upside. So the 21 being above the 55 EMA, which serves us with another positive signal that we could see some more downside happening in the next coming weeks. Another signal is just the uptrend that we are experiencing right now. So first of all, we had lower highs and lower lows going on until we saw this bottom over here. But now we have a higher high confirmed over here, which is a higher high compared to this high over here, and a low confirmed over here, which was a higher low confirmed to compared to this low over here. So that is an uptrend, and that is also a bullish signal, of course. The RSI looked pretty good to me too. A nice little bullish setup on the RSI. We are in a very constructive move to the upside. RSI EMA is going nicely to the upside. The RSI is using the EMA a little bit as support, so that seems pretty good. And the last thing I'll talk about here on the 4-hour chart is the MACD, which also seems to be relatively similar to the RSI, being constructive as we can see over here. It is still relatively low compared especially to this read over here, which was a while ago on the 13th of March. But yeah, we definitely have more room to go on the MACD, I would say. So what is my exact trade plan right here? Well, as I said, I entered right after the 4-hour candlestick closed over here at 51.3 cents. That's where I entered. And yeah, that is, of course, because of all the reasons we have been mentioning in the last couple of minutes. And I plan to exit, first of all, if we go to the downside, I plan to exit when we close a candlestick, a 4-hour candlestick, below the 45 cents support, because yeah, that's the support we have been talking about, which is created by this low and this low. So if we close a candlestick below that, I'll exit my trade. And that would be I think more or less a 12.5% loss. Let's actually figure it out. Yeah, about a 12.5% loss if that actually happens. And to the upside, if we go to the upside, which hopefully is going to be more likely, I would definitely take some profits off at this level over here at 68 cents because of this resistance over here created by this high. And that would be a gain if we go from 51 cents more or less to 68 cents of about 33%. So in total, if you look at the gain of 33 cents and the loss of 12.5 cents, then it's more or less a ratio, a risk-reward ratio of 3-to-1, which seems to be solid to me. And I think we also can draw in a nice little additional resistance because of this 4-hour candlestick closure. Let's see. Yeah, I think we can put a nice little resistance over here. So what am I going to do if we actually get to that 68 cents level? Well, it depends a little bit on the price action at that point. This, again, that 68 cents level is about 2/3 of the move. And as we have seen with GameStop and Electromechanica Solo, usually what happens after a major pump like this, we get a cool down period, then we get an additional pump to about 2/3 of the original pump. So 68 cents could definitely be a solid target. And what I'm going to do when we reach, or if we reach, of course, that 68 cents target, and it's definitely not something that has to happen for sure, but if it actually happens, then I'm definitely going to take some profits around that level. How much? Well, it depends a little bit on how aggressively we get to that level. If we get up really fast to that level really quickly, then I might take off like 1/3 when the approach is, or when the resistance is approached. So when we get more or less to that 67, 68 cents level. If we get there a little bit more slowly, I might take off about half of my position or 2/3 of my position and let the rest ride a little bit longer. And then I'm going to reevaluate the situation and maybe target a move all the way up to 87 cents, which is, of course, the previous all-time high on the 4-hour chart. So I hope that explains what I use, what I look for when I use technical analysis for my swing trades. Currently, I'm working on a program about technical analysis for complete beginners. So if you would like to be interested in that, you can go to nasami.com/TA, and then you can sign up for this newsletter, if you will, to stay in the loop, to stay up to date about this program. I'm likely going to be releasing this in 2 to 3 weeks. So if you want that, you can leave your email address to stay up to date. And of course, I'd also like to hear your opinion about Chiliz. Are you bullish or are you bearish on Chiliz right now? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!